My name is Parul Bandari, and I'm the owner of Customer X Success. We are a boutique customer success consulting and fractional firm focused on helping early to mid-stage startups and companies, as well as customer success teams, achieve their customer experience goals. When I started Customer X Success, I had a mission to help companies achieve success. But it was also 2024. Success had a different flavor with a challenging market and retention being front of mind. Funding also became a bit more scarce. So I decided I wanted to learn more about the landscape to more holistically support the founders and the companies that I work with. So hence this webinar series was born. I call it exponential customer success because that remains the goal and everyone deserves it. Today's focus is a unique interview because it's with the head of platform at Highland Europe, as well as my brother, Abhishek Lahoti. So in a way, I'm cheating a little bit by having him join us, but thanks for joining us today. How are you?
Yeah, good. Thanks for having me. It is, yeah, it's funny to be related to the podcast host or the webinar host.
I know I'm going to try to be formal, but it may not, we might have to just dive into
Good
family
stuff.
talk as well. Um, so obviously I know you well, but for the listeners, and you go by Abhishek in the proper world. I may call you Anshu from time to time, which is our nickname for you at
Yeah.
home. But tell us a bit about your story. Tell everyone, who are you and how did you get to working in VC?
Yeah, great. Again, thanks for having me. It's going to be fun. So yeah, my name is Abhishek. I work as head of platform at a VC firm called Highland Europe. Highland Europe is a sort of early growth stage VC firm based in London and Geneva. We focus on tech-enabled businesses and B2B and B2C, usually at like a Series B or a Series C financing round. That's a lot of jargon. It just kind of means that the companies we talk to tend to have already gotten to product market fit, know that there's customers, are seeing a little bit of success, and are looking at scale, whether that scale means international scale or different verticals or anything like that. Head of platform is a unique role. It's the first time this firm's had a head of platform, and what it means is that I'm one of the few operators in the room. There's a lot of really, really great investors who have amazing backgrounds, but my background was actually in startups and in technology, doing sales, business development, and various different types of um, very, very scaling work. So I came in with the eye to operationalize a lot of things, to help to value add to our companies with whatever processes and programs I could think of. And just generally trying to add a little bit of that extra sort of flavor because the general consensus in VC today is that money is a bit of a commoditized thing, very literally. And how do you add value outside of just the check that you write? And that is usually a board member of a really, really great caliber investor. But what other things can you do? And that's where I come into play. And uniquely, though I'm your brother, I live in London, so I'm based in Europe. I moved here about 7.5 years ago. So an American living abroad, working for a European-focused investment firm. I have a bit of an interesting kind of vision to the tech industry, having spent also 10 years in California before that. I think that's a pretty good kind of start to the conversation.
Awesome. Yeah. And definitely you have that unique lens of like true Silicon Valley all and taking that over to Europe. So definitely we'll dive into that in some of our questions. Tell us just like on a personal note, do you have any hobbies, interests, things you do outside of work?
Yeah. Well, right now the hobbies are pretty contained. I have a 2-year-old daughter who takes most of the time, and my beautiful wife Lauren is expecting our second kid in December, a boy. So I think that will be the majority of my time, which Parl, very well, takes a lot of time. I also do love to travel as an American in Europe. It's, a bit of a world is my oyster attitude. Everything's cool and different and fun and historic, which is great. And then I also do triathlons as sort of my athletic hobby, if you will, which just means that I do 3 sports regularly enough to try to loop them all together in a way. I think that's a good beat on things. That everything else that I used to do is probably fully out the door now that I have a 2-year-old running around.
Yeah, that kid life will get you. But you still managed to do triathlons, which is super impressive. And not, yeah, not something I have ever thought I would even try. So let's say you get effort for trying and doing.
Yeah.
Um, Okay, tell us, how did you get into the world of venture capital in the first place? Because obviously I know, but and you kind of mentioned that you maybe were working in tech companies before. What made you make the leap?
Yeah, I mean, living in San Francisco when I was there, venture capital firms were kind of abundant. A bunch of friends of mine worked at VC firms. I knew people in the industry, and I worked at venture-backed startups. And knowing what it was one thing, just and a cursory awareness of this person is the board member and the investor who's given us a bunch of money to be successful. I moved to Europe and at first just sort of kept doing my same job and focusing my energies as I would, and then inevitably got into advising and working with the startup ecosystem here. Coming from a California background, it really helped me um, get into the experience here by explaining what I saw there and how things were and how we differentiated ourselves in the industry in California. You can call it a bit of a, Silicon Valley transport, if you will. But in just doing that and being more and more tied to companies and doing different jobs at the company I worked at called Dropbox at the time, I found myself just sort of in this spread of action across startups in the ecosystem. So I built VC partnerships at Dropbox for the actual Dropbox product to be given as a discount to portfolio companies. I advised a bunch of small companies on go-to-market success and how to be a bit better about sales and sales attitude with a bit of an American mindset to that. And then I got called by a recruiting firm one day saying, "Hey, this VC firm called Sapphire Ventures is interested in looking at you for a business development role." So VC business development means you go out and you find potential customers for your portfolio. You build this relationship, you build a really great network of people who can be thought leaders, who can advise your investors on what they need, can be diligence providers, but also ultimately can buy the technologies that you're investing in. And that was a really fun role. And I got to spend 2.5 years working for that firm they were based out of Palo Alto and I was in London. So I was part of this sort of remote team in London. And that was my foray into VC. It absolutely took a lot of learning though, because when I thought, okay, I live and breathe tech, let me go do VC, which obviously invests in tech. I realized the jargon, the metrics, the attitude, the technology in the actual company, they were all so different. So it wasn't as if it was an easy transition. It was a lot of learning to just get up to speed on like what DPI and TVPI would mean and what an internal rate of return was and what was good and top quartiles and all these things that you never had to say as a potentially like a salesperson at a technology company.
Yeah, that's great. And that's really good insight. I mean, I think a lot of us probably take for granted what the role of these what it's like to work internally. So I can imagine there's quite a bit of learning there. Okay,
Mhm.
so tell us, you were, worked at both firms in the US and now you're working at a European-based firm. What are some of the key differences? What are you seeing in the landscape that you're noticing that stands out for you?
Yeah, both jobs were based in London. The team that I worked closely with at Sapphire here in London invested in European companies, but with the American lens to it. And the team here at Highland Europe invests in European companies, but with a kind of a European lens to it. The differing attitudes are the biggest thing. So it boils down to risk aversion. I think Americans have a really, really, really good and strong risk appetite. And it's well known in the world that, Americans were more likely to sort of endeavor and pioneer in that way. And it works in technology. And that's why there's so much innovative technology that comes out of the US, but also, you know, countless failures that will come out of the US. In Europe, it has a different attitude of risk in general, and that underlines a lot of how VCs operate here. So if you're going to make an investment in America and you're going to write a sizable check on somebody, it doesn't have to have the same underlying core constructive metrics as maybe a European firm would need. That being said, in our current climate of higher interest rates and the need for better fundamentals around a company, you're starting to see that sort of come closer together. Yes, in AI and AI enabled tools, you have this like absolute deluge of money that is for companies that are burning a ton. But excuse me, if you zoom back and you see the rest of the ecosystem that's not just pure LLM technologies, you actually need to be able to prove success at a much earlier stage than you would have. So just because you're pulling in revenue, if you have most of that going out the door and you're burning quite heavily, it's not as attractive as it used to be because the mentality of our old investment thesis of the US years ago was you can make that up. If you have a bunch of customers and you acquire and you acquire and acquire customers, you can figure out how to cut your burn eventually to the point where you can hit that cash flow positivity. And nowadays, they kind of realize that the spigot of unlimited funds and fundraising is no longer a thing. And I think that Europe has kind of always operated that way. They've always operated as if that spigot is always a resource that should be constrained and used thoughtfully. And as a result, we never have the number of massive decacorns and so on in the industry, but we do have a lot of really, really amazing and sizable advantage companies and some that will cross the pond and be huge companies as well. Um, but I think that's fine. I think the risk appetite for an LP, ultimately the person who gives a VC the money, their risk appetite for the two is measured and understood. And that's why you'll see a lot of people who still want to follow a hype train and invest heavily in AI will still follow those US funds doing it, and some of the European funds who are also do a little bit of it. But those who want to stick to sort of more of the fundamental investing style, which is akin to what I see more European investors doing.
Yeah, that's a really good way to sort of also explain to people of like what happened in 2023 and 2024 and like what this change was. And I think maybe we had this mentality in the US, like you have to spend money to make money, right? Kind of thing. And now it's like, yes, you have to spend money to make money, but you have to, you're not going to put your bets all over the roulette board, so to speak. You're going to be a
Yeah,
little bit more thoughtful. I don't know why I'm thinking
yeah.
of
Look,
gambling.
it's true. It is. I mean, ultimately, it is. Luckily, in gambling, well, unluckily in gambling, if you lose everything. But in VC, usually it's a matter of the percentage of your investment you get back. But I mean, prior to our interest rates going up the way they are now, in some ways, money was sort of always available. It was low interest rates. It was a constant availability of people to give money out to. And you kind of noticed it actually. If you paid very close attention in 2021, those companies that were going public, and we had IPOs regularly in 2021 in the US. And the thing is that not many of them had great resiliency after their initial offering period. Many of them spiked and had really great first days, and it made the institutional investors a bunch of money. But a lot of VCs were beholden to the same lockup periods that the employees were. And so after that 60 or 90-day window, things kind of settle down, and those multiples that you were paying, 20, 30x multiples on your revenue at the time, they don't live that way in a public market. You would never look at a publicly traded company and be like, we will give you 30 times the amount of revenue that you make now for some future success because Nike's a big company, for example. You would never think that Nike's going to 30x itself. It's just an
Mhm.
astronomical amount of money. So public markets are a little bit of there's a lot of visibility that goes into it. And this also kind of lends into the differences of the US and Europe in that in the US, private companies are very private. You don't tell much about what's going on there other than you've incorporated and you have to file your taxes and stuff like that. So when you go public, you're suddenly opening a kimono, if you will, and showing everybody all these financials. Whereas in Europe, a lot of the countries in Europe have pretty rigorous standards in how you run a company. So you do report stuff and you're less private than you realize you are. And as a result, that means that those companies grow at sort of a measured pace and the IPOs that happen are a little bit more kind of structured and a little less unwieldy. That being said, there were still, the ones that went public in 2021 that now are gone or trading at a cent or something like that in Europe as well.
Mhm.
But yeah, that's kind of why it happened because ultimately we got higher interest rates and money wasn't free, quote unquote, anymore.
Yeah, and definitely we're seeing that. So how does I guess Highland focuses primarily on, well, I guess you tell us. What is the focus of Highland Europe and as far as like location based, like which regions do you look for founders in? And then what are some of the like investment philosophies or values that if someone's listening to this going like, oh, that we would love to, kind of maybe chat with them someday. What are some of the things you're looking for? You gave us some of that early on too. Um,
Yeah. Yeah, you'd come to us when you've got product market fit. If you're a B2B company, that means you've probably gotten or you will get at the end of the year to around a 10 million average annual run rate of your revenue. If you're a B2C company, it's a bit of a more of a moving target, but it's a more mature company. You've proven some fundamentals. You might have gotten to like 20, 25 million in revenue, and you don't have, crazy, crazy burn on that. So if you're making 20 million, but you're spending 20 million, that's not really going to be the right kind of company because that means that, your spend is kind of equating to that dollar back. And in consumer, because consumer multiples are usually just less on the market, we have to, take that with a little bit of grain of salt. But we look at you when you're in that kind of phase where, hey, I've created something, it's going really well for this subset of users or companies, and I want to now scale this thing. I want to look at it and I want to say, move to the US if you're a European-based founder, or I want to expand into other European markets. Let's say if you're in fintech and you're really regulated in the UK, but you want to go to Germany or France or something. So our founders are European. Either that means that they're based here in Europe. That includes Israel as well. It includes a lot of the Middle East if we find a good company there. Or they're kind of European in their heritage, but maybe they live in the US and they've started this company and have a big team in London or in Berlin or something like that. So it's really loosely a term of Highland Europe. The idea is that we want to help this sort of general European ecosystem, whether that means that the founder is actually based here or living elsewhere is fine. If you're an Irish guy and you've moved to the Bay Area and you are building a company and you are focusing on the US as your kind of core key market, it's harder to make that sort of leap for us because it's really truly more of an American company that way. But we're flexible. The idea is that finding really good people to sort of enforce this European excellence, if you will. As a non-European at the firm, there's a couple of us too. It's quite funny to have to like think about how Europe is going to be successful, but it's where I call home now. So it's kind of fun to do.
Yes, and that goes for the Irish girls out there too. If you are building something cool in
Yes.
San Francisco, Highland Europe would have
Yes.
to think twice because it may not be the focus. Okay, that makes a lot of sense.
Yep.
And I think obviously we're also seeing, firms sort of grow into new areas. Like I think you mentioned having the first of your kind head of platform role. You don't obviously like see these jobs on the job market today. Tell us a little bit about I mean, I know you gave us some insight, but like, why did they choose to do this? Like, what makes this role unique and what value do you provide to that portfolio or to the company back? Kind of curious on this role and its evolution.
Yeah, so it's not a super new thing, but it has its ethos and its inception in like the earliest days of VC. So oftentimes if you read a really good book, it's called The Power Law. We read it for an offsite at my last company, but basically the idea is the earliest VCs would come in and give you money and find you a CEO, or they come and give you money, find you a co-founder, or they'd come in and give you money and help you land this, that, or the other. That happened with Cisco, it happened with Google. It didn't happen with Facebook, but they did help get like, other good leaders into Facebook and so on. A lot of the idea was that the person building a company in their garage didn't have the operational excellence of an MBA. And at the time, it made sense to grab that professional CEO and have them steer the ship, if you will, whilst the idea people and the product people would be building and scaling this product. So that was a very common way that VC worked back in the day. We've more formalized it in our era now, where there's people like me across many a firm. Where I worked at Sapphire Ventures, has a whole team of them, and they're amazing. There's teams at Index Ventures, teams at Iconic, teams at Bessemer, all these really big names, and Excel and Insight and so on. So the idea is that we can sort of take that operational effort, we can structure it, we can use our experiences, and let the investors do what they're really good at, which is investing in board membership. Um, Generally, funds tend to push on these big, big, big new initiatives across each fundraise. So if you look at a VC firm, it's this holding company, and they go out and they raise a fund to invest, and that fund is usually just numbered. So we're on our fund five. I've been in, my previous firm had like fund six or seven at that time, and at that fund raise point, there's usually a good inflection point to start adjusting, working on, and changing the style of the company, if you will. So I think this particular uh, job and this role came about because Highland Europe was like, look, we're going into Fund Five. We really need to do a bit of a concerted job on the excellency of our advisor network and the talent that we're going to do, as well as the community that we build. So let's go find someone who can do that and sort of build us this stable of really, really wonderful individuals who can help our companies be successful. So that was the ethos. I think they went out with a search firm that they work really closely with, and they were trying to find people who fit the bill. We're having a little bit of struggle. So I don't know how long they were looking. I never asked, but I got introduced to a friend, just a buddy of mine who lives in London, who knows one of the partners here, and said, hey, these guys are looking for head of platform. As far as the roles go, head of platform is kind of like the ideal builder name for that kind of role because it means that your job is to take whatever operational thing that you can and build this sort of structured value add platform on top of it. So that's how it came
Hmm,
about. And I just met the partnership here, had a bunch of really lovely conversations, and was excited to join.
nice. Okay, so you talked a little bit about advisors. I'm going to shift a little bit for our audience, for my audience. Talked a little bit about advisory and or like how, building out things that can help your portfolio. I would love to know, do you see or hear customer success playing a role in the work that they are doing? Obviously, I'm going to assume yes, every B2B company at this stage is going to need it, but I want to hear like, do you hear these conversations coming up from your portfolio, or are these needs that are expressed? Because I feel like we assume they are, but I want to know, what are you hearing on the inside?
Yeah, no, it does. Usually by the time they've come to us, they've at least landed the original idea in person and execution of customer success. If you're a VC-backed company, there's people sitting in your investor roles who are looking for some sort of hyper growth and hyper scale of what you're doing. People have differing opinions on whether or not that's good. Some people think it's like unnecessary to be forced to scale that quickly. Excuse me. But one thing that's inevitable with anything of scale is that you can't lose your customers. You have to really treat your customers well. For the companies that I advise, I always tell them it is almost better to lose deals that you've been trying to close but retain the current customers you have because acquiring customers costs a lot of money, like onboarding them and getting them into your product. It's money that you don't really recoup if you look at the long-term value and the customer lifetime value of your company. You need to really, really, really take care that these people live with you longer than that first year. If you're a B2B company with ARR, you want to get them to that second and third year because that's when you start to see the actual core company return of money of what you've spent to acquire this customer. So that's an early stage thing. If you have 5 customers and you have a pipeline of 15 and you're about to lose one of those 5, I always tell my CEOs, drop what you're going to do. Make sure you don't lose that customer, whatever it is you can. If it's inevitable, it's inevitable. Don't spin your wheels. But if you can save that customer, then save that customer. Because in that first 5, 10, 15 customer space, one loss is much, much bigger than 2 gained. It's a little bit like more extreme than you would think. So as people get to our scale, they've built out customer success a little bit. They've started to have at least a couple of customer success managers, but they're starting to inflect into chief customer officers. And that's
Mhm.
kind of a new title and a new transition. And that chief customer officer is now a person who's in charge of renewals. It's differing than a CRO, and oftentimes that CCO will report into the CRO, but they should really be separated in a perfect kind of large company because a chief revenue officer should be in charge of gathering business for the company. I have a team that goes out and I hunt it and I pull it and I make it so that we have signed contracts with the ability to grow our business. The chief customer officer's team is in charge of onboarding and scaling those customers, especially in a product-led growth world that we live in, to make sure the revenue is maximized over the lifetime value of that particular customer. So they work very closely together, but things like renewal teams, things like customer success managers, they all start to, in our space anyways, live in a different pillar of that sort of organization that's tied to go to market. The benefit of that is that the incentives can be really, really structured individually for the two. So you pay your salesperson based on the contract that's brought in and the potential first year value or whatever it is. And you pay your customer success people on the renewals and whether or not they've upsold their companies. And that's really where we're seeing a lot of success, at least in the growth stage of customer success. One thing also that's really interesting to note is across the European and American ecosystems is they're viewed very differently. Customers are a little bit more loyal in Europe. They take a little bit harder to close, a little bit more time and a little bit more relationship to close. It's a little less transactional. So you have a better chance of retaining your customers a little bit because of the European angle of how you need to do that sale and how you need to acquire them. It doesn't mean that they're less important. It means that that particular CCO role becomes slightly more impactful earlier on because it took you a lot more effort to close that customer. And whilst they might stick with you, they can still drop you after a year. Everybody has that ability. And you need to make sure that you've played into the reason that's not a good idea for them.
Gosh, okay, everybody listening, underline that. I feel like that's, it's like a simplistic concept, but obviously what you kind of said is just made me think, right? Like we're all revenue teams. The titles are getting confusing, to be honest, in the world, but like we're all revenue teams because obviously there's the revenue that comes in. It's like the whole revenue bow tie concept, right? The new revenue, and then there's the like the hunted revenue and the farmed revenue, and we all have to work together and be one happy family. But a lot of
Mhm.
times, I think we're not necessarily seeing um, every customer success team as a revenue agent. I mean, revenue is inherent, but I love to just kind of hear that perspective of where you're seeing
Yeah.
success.
Yeah, I mean, most of the time when we introduce like a customer success advisor or we're trying to get someone more leveled or search for a CCO, um, this comes out in the analytics, and it also oftentimes ties to having a RevOps person, revenue
Hmm.
operations, because you can start to actually pull the numbers and understand what was your cost of acquisition for this customer, for the customer base. What is the average payback period for a customer? If
Hmm.
your average payback period is greater than 12 months, I would argue that customer success has an outsized role in the survival of the company because whilst your salesperson is really happy to get paid their bonus based on the revenue brought in, if they sell a crap deal, that churns after a year and your payback model is such that customers aren't really in the green until 14 months, you just spent more money to get a customer
Oh
in
yeah.
than they were worth, which isn't great. So yeah, I really abide by the idea that a really good customer success manager is like a good salesperson. They are the CEO of their deal. They're the CEO of their account. When they pull
Hmm.
somebody in, that person's taking marching orders from them, and it's not like hey, I'm sharing this ownership with this person in that way. Really good example, because Lauren, my wife, she works at Salesforce, and she was saying that the person who runs the Nike account from both a sales and a customer success experience just lives in Portland. He lives near
Yeah.
Nike. It's like the
Hmm.
extreme version of this, but he knows that in order to be the best version of this huge account that he runs, you just have to be there. You have to be able to pop in the office, 2, 3 days a week if you need to.
Yeah, and you're talking about, I mean, several themes here, but I love this, like being the CEO of your deal. I mean, many CS people don't always, I don't know if they have that level of ownership. And I think that's so important. We see it in the strategic, like this Salesforce example is like a great example of a strategic, CS. But even if at the lower levels, even if you have accounts that are not as large as Nike, you need to be thinking of how to be the CEO of those deals because, like you said, the cost of acquisition is high. And frankly, probably getting higher with just how much we overhead we have as businesses these days. So
Yeah.
really it's that's the key value metric that we need to be tracking. So I love that.
Mhm.
Okay, so tell us what if you have any advice for folks that might want to get into venture capital doing what you're doing. How do they get started?
Yeah, it's tricky. You're right. These jobs aren't often posted on any sort of job board. Um, they oftentimes go through really strange recruiting cycles. I'm board member of a group called VCplatform.com. We actually host a job board for platform individuals. So if any of us are ever hiring anybody, we post it there so that the ecosystem and the network can see it all. They're super helpful and it's a great industry group. And you gain a lot as a person in my position from that group. Um, Finding a way into VC is tricky because what you need to know to do is to no longer have a very zeroed in focus on one thing. And what I mean by that is the reason that VC was a little bit more appetizing for me is that at the moment I joined, I was sort of spread across a couple of companies. Yes, I had my full-time job working at Dropbox, but I also was advising a couple of companies. So I'd have a couple hours every now and again where I would dive deep into someone else's problems and someone else's product without needing to know the ins and outs of how it worked or the API structure or anything like that, just knowing the high level problems and details. And VC world is that. You're never really, really deep on any of these companies from a technical or from a sales perspective or from the revenue structure of it. You're looking at all these high level metrics and you're trying to look at how a portfolio operates as a whole and how do you treat a portfolio with guidance, with advisory, with help. Um, I think doing a great job of networking is helpful. We're all people. We all talk to folks all the time. I meet people who are curious about platform roles all the time. So you should just network with anybody you know who's in VC, anybody who is willing to have a conversation about it, about what you can do, what you think is helpful, what they think you should start to figure out, how you should meet different partners and that kind of thing. The trick about a job like mine is no one here knew about VC platform before I joined. They were looking for a head of platform. They went out to a search firm. That search firm did their work, but all of our industry groups are doing more of a job to get in front of more and more managers to say, if you need somebody, we have a stable of folks who are kind of out and willing and able to do it. If you work at a large company who happens to have a partnership with VC firms in some way, ask to be introduced to that, ask to learn what they're doing, ask to like understand who the VC firms are. I have partnerships with Zendesk, with Adobe, with NetSuite, with NVIDIA, Google, Microsoft, all these people, and all of these big companies, yeah, they're massive, they're huge, they're hard to like navigate. But if you can find somebody in your office who happens to be aligned to the VC ecosystem, they have a really good beat on what we do, how we work. And if you sell to our companies, you should kind of go up a level and talk to us and say, hey, look, I already sell to your companies. Why don't I give you guys some sort of package that you can just publish to them and say, get into a discount or 6 months free or whatever it is. So those kinds of interactions help us to know who you are and what you do. But really, truly, it's tough. It's not a huge ecosystem. There's not thousands and thousands and thousands of VC platform people. Globally, it's a small group of us. But if you're interested in getting into it, it is a matter of just kind of chucking in, working on it, finding what happens. When I told the story of how I got hired at my last job, I actually got an interview for a different firm before that. I didn't get the job, and I did wonder to myself, how do I get into VC? So I did do my diligence and kind of plug in and index more on my networking. It was the COVID pandemic, so it was hard to do all that, but I did it virtually. And that did kind of lead me into potentially getting a new job because I just had way more to say when I ended up getting that conversation.
Yeah, that's awesome. I'm going to add a point that I am doing. I am just to learn the like what you said about the lingo and understanding the metrics. I personally am doing a venture fellowship. I know these are offered by different places, and I'm actually starting it today. Super excited. So, for people that are out there, there's a lot of ways to get educated. Like, I'm really doing it for education and to dive in and feel like I could speak more clearly, especially to the founders that I talk to that are looking for funding, understanding how are they going to get there. Um, Anything else to share for those in the market today or those founders out there that might say, like, hey, I'm interested in Highland Europe? Any kind
Oh,
of last closing thoughts?
yeah, I mean, definitely get in touch if you think that, your company kind of suits the general ethos of us. We oftentimes like look at deals and we can't do them or whatever it is, so we do share it around. So we're always like happy to be a networker in that way. No, it's a funny world out there for investing, and it can be a bit daunting, and it can feel a bit like you're spinning your wheels. But I do remember even when it was really good, someone did say they pitched maybe 50 to 100 VCs until they got their first term sheet, and then they kind of trickle in from there. So, don't give up hope. This is a really, really difficult thing that you're already doing. And once you start to get a little bit of traction, I hate the word traction because we all use it all the time. It doesn't mean anything real. It reminds me of tires, but that's the idea. Um, Once you get that little bit of traction that you need to start to move yourself forward, index on what's working. It's really, really easy to get distracted by all the opportunities in front of you. And I tell this people all the time, figure out what works at a very basic level, do it very, very, very well. Make it your own. And then you can start to, add on the ancillary things. If you're going to build a house, you need to build the frame and the foundation of the house first before you decorate and paint the rooms. Don't think about your paint colors whilst you're nailing in a headboard, like a baseboard or something like that.
Awesome. Well, this was very fun. And again, thanks for doing this,
No
joining
worries.
me in this journey. It's been great. I think I learned quite a bit about what you do. So, when it comes to family, sometimes you don't dive so deeply into the world we the work
Yeah.
in, but it's been awesome. And say hi to the lovely ladies at home, and we'll talk again. And for everyone else listening, I hope you'll catch the our next episode as well.
Thanks so much. Take care.